Hey guys, today we're going to be reviewing the Euro-Dollar daily bias from last week, and be sure to check out this review section because it's going to really help you guys understand how biases work. Okay, and then we're going to cover a new daily bias on the Euro-Yen. Alright, so let's start out with the Euro-Yen. Okay, this is a daily chart. Let me run you by the current setup I was looking at. So the last daily short trade, that form was right here, and the last daily long trade, that form was right here. And the initial outlook for this bias was short, or in other words, price was likely to reach this pivot low before reaching this pivot high. However, for the last week, as price ranged about in these areas, I was waiting for lower confirmations to confirm this short bias. However, it never formed, and that main target was hit at this point right here. And so this daily bias is reset back to neutral at this point. Okay, but let's go ahead and review what happened in this area for educational purposes. So let's go over to the 1 hour chart. Okay, so on this 1 hour chart, that daily bias was initially stating that price is likely to reach this pivot low before reaching this pivot high right here. And so as price ranged about last week in these areas, I was waiting for lower confirmation on this 1 hour chart to confirm that short bias. However, it never formed, and that main target was hit right here. Now, one thing I do want to mention about this setup is that roughly in these areas last week, I was already pretty sure that price will fall down to its main target without making lower confirmation. And that's because the current price in all these areas was showing strong signs of current strong short strength. Okay, so let me just show you what that's about. Let me zoom in real quick. Okay, so an easy way to know whether there is strong short strength in a pair is when there's many rejection candles to the top side, repeated over and over, all in these areas right here, showing that although price is trying to go up, it is rejected down every time it tries. Okay, and moreover, this is a common staircase pattern showing a miniature trend forming to the short side. Okay, so when you see this type of many rejection candles over and over, and moreover a staircase pattern to the downside, you could expect price to hit its main target relatively soon in a short bias. Okay, so I'll keep you guys updated when a new daily or weekly bias forms on this pair. Alright, so let's go on to the Euro-Yen pair. Okay, and if you're having trouble understanding what I'm talking about in terms of weekly biases and lower confirmations, please check out my strategy manual, which is an instruction book for these forecasts. Okay, and the download link is in the details section of this video. Okay, this is a monthly chart. We'll start off with an overview. So since there was a breakout and immediate break back in right here, however, price still came up to that pivot high to create strong long strength, and therefore we're going to push up all the way up to these levels. And at the current moment, there are no signs of this long strength waning, and so in the long term, I'm long biased right back up to this pivot high right here. And moreover, on the daily chart, there was a short trade that form and a long trade that form right here, and I'm currently waiting for the lower confirmations to confirm this bias. So in the short term, I'm neutral biased. Okay, let's talk entries. Okay, so on this daily chart, the last daily long trade that form was right here, and the last daily short trade that form was right here 3 days ago. And so let's go ahead and do our initial analysis to figure out how much short strength and long strength there is for this bias. Let's go over to the monthly chart. Okay, so on this monthly chart, that daily short trade formed in this area, and that daily long trade formed in this area. Now, in terms of short strength for that short trade, first of all, we have this legitimate trend line running right through these levels right here. And moreover, we have this miniature gap right here, both providing short strength. And in terms of long strength for the long trade, we have another legitimate trend line running right through this area right here. And moreover, this medium-sized gap right here, also providing long strength. Okay, and in terms of the calculation of the strength differential, first of all, both these trend lines are equal in strength, and that's because they have an equal amount of touches, right? There's 1, 2, 3, 4 on this one, and there's 1, 2, 3, 4 on this one also. Okay, and seeing that this gap is much smaller than this gap right here, the initial outlook for this bias is long. Okay, so let's go ahead and total this up back on the daily chart. All right, so on this daily chart, we finally want to configure in the strength of these candles. Now, in terms of long strength, we have these nice full candles. And moreover, for this short trade, we also have a nice full candle. So in terms of candles, I would say it's about even. Thus, in total, this initial bias seems to be long, Or in other words, price is likely to reach this pivot high before reaching this pivot low. However, in order to take a trade, we need the lower confirmations to confirm this bias. So let's go ahead and see what's happening over there. Let's go over to the 1 hour chart. All right, so on this 1 hour chart, the initial daily bias is stating that price is likely to reach this pivot high before reaching this pivot low. However, if price does not reach its main target at this level and pulls down to this trend line right here and breaks it out, it immediately breaks back in. However, price comes down to that pivot low. That's going to create strong short strength and confirm this daily bias to be short. In which case, I'll be willing to take a short entry with a stop loss at this pivot high and its main target right here. Okay, so in this way, you want to remember that the lower confirmations always have the ultimate say. And that's why, although the initial analysis is stating that this bias is long, if this lower confirmation forms right here, confirming a short bias, I'm more than willing to take a short entry. Okay, so we'll just see what happens with this one, and I'll keep you guys updated, guys. Okay, so that's it for the weekly analysis. Today, let me briefly go over the differences between a bias and a trend. Now, since a bias does not have a directional tendency, it could trade in both directions. So even if a pair is going down for the entire year, every time it pulls back, you could trade these pullbacks, as well as in the direction of the trend. All right, but on the other hand, a trend only allows you to trade in the direction of a trend. Okay, and moreover, a bias also allows you to trade ranging markets, right? Because it doesn't require directional tendency. While on the other hand, if you're trading trend strategies, if a pair is ranging, it's very hard to find any setups during the year. Okay, and the second major difference is that a bias allows you to get in and out of a market many times per year, while a trend strategy forces you to stay in a trade for an extended period of time. Now, the reason why you could get in and out of the market using biases is because it has clear-cut short-term targets, while targets for a trend may not exist or typically have bigger targets. Okay, so those are two major differences between a trend strategy and a bias strategy. Now, putting that into practical terms, if you're trying to be a day trader, biases are more fit for your strategy, and trend trading is more fit for the investor. Now, that's because as a day trader, there's 3 requirements in order to trade successfully. Now, number 1 is that you're going to need a lot of trade setups throughout the year. And since biases allow you to trade in any market condition, whether a pair be trending long or short or ranging, a bias strategy will give you many setups throughout the year. And moreover, again, biases are always going to give you shorter term targets, which allows you to close a trade and go on to your next one many times throughout that year. Okay, and the last thing you're going to need to successfully trade as a day trader is the ability to make real profits instead of paper profits. Okay, and since biases allow you to get in and out of trades many times in the year, it allows you to lock in real profits. And opposed to that, if you're trend trading, although you may have paper profits, you want to remember that paper profits can't be used in the real world. Okay, so just remember, if you're planning to day trade, biases are much more fit for that trading style. All right, so I hope you guys have a great week, guys. Thanks for watching. Goodbye.